In the past, I have encouraged people when they're doing their investing to think about in a portfolio or a 401k or, Roth IRA to have some sort of ETFs or index funds to help balance out their investments. And I still hold to that, but there are some caveats that have arisen, I would say, in the last year. One of the things that I really still very strongly believe, I have always said this and I still do, mutual funds are a waste of time. I don't really like them almost at all. Mutual funds tend to be too expensive for being in, and they're too easy for people to bail out of. I just don't feel like they're the most stable investment. Meanwhile, I still feel like there are extremely solid index funds and ETFs, ETFs being exchange traded funds. ETFs in specific, though, there's a lot that's changed in the last year, and you have to pay a lot more attention to what's going on with ETFs. Just in the last year, it is ridiculously like vast, the sheer volume of ETFs that have just appeared out of nowhere. So many ETFs are now very specialized, and they are specialized in ways that don't really beat benchmarks. I'm not sure why anyone would jump onto these ETFs. They tend to have higher fees and be focused on things that are not historically winning strategies, but they exist. So now you have a case where some ETFs are pretty solid. An example, please don't take this as financial advice. This is just an opinion, something I'm saying as part of educational purposes. Don't come at me, don't sue me, whatever. But for example, I would say SCHD. I personally have that in my own portfolio, and it kind of stays pretty level, especially the last couple of years. But the dividends that come back from it and the levelness that it holds keeps it nice and steady. And the entire point for me of an index fund or ETFs are that steadiness, that balancing that they bring to an investment portfolio. So I've actually been completely happy with the results that I've gotten from that particular ETF simply because it is being a draft horse that pulls the plow. And that's really all I need it to be. It is giving a good returns with 100% or even 50% drip, and it's fine. Like, it doesn't need to be the most spectacularly fast earning, thing in my portfolio. That's not what it's there for anyway, and it's doing its job. The thing is if it's returning like 10%, I'm content with that. I don't need index funds and ETFs to be my big giant growth, investments. But there are some ETFs that are a pretty bad investment at this point. And I've always been a fan of ETFs ever since they first started out because they came with really low fees, and they also gave more opportunity for people to diversify their portfolio with less actions while creating more accessibility to some of the high-end stocks that can be a little bit of a pain to try to get if you're buying them as a single stock. ETFs still have that quality, but now there's a whole bunch of junk ones that are things like single stock ETFs, or ones that are based on calls or buffering ETFs. They have way higher fees. The strategies again are a failure like 85% of the time. Even for like, day traders and stuff, they're trying so hard to beat the, market benchmarks, and 85% of the time they don't. They're actively managed, funds that are derivative funds, and they're just not smart. And they've been popping up everywhere. in the last year, there's been so many new ETFs launched that there's actually, for the first time ever, I think more ETFs than there are stocks, which is just what? It's unnecessary and it is clogging the system with a bunch of distractions from the good things that can be in ETFs. Something I've recommended before and I recommend again is if you're looking at ETFs in specific and you're not sure how to wade through all the sludge of ETFs that now exist, I'm going to give you a couple of tips. Number one, if the fees are above or even at or above 0.07%, I'm going to say they're probably a waste of your time. In reality, especially if you don't know what you're doing and maybe it's your first time investing or you're a beginner investor or maybe it's just not your thing and you sort of just pick a couple of things and hope they're good, an ETF that's charging you that high of fees is probably a waste of your time. Also, ETFs that are, again, buffer ones or single stock ones, all these kinds of ETFs that are based on calls and puts and actively managed in that kind of way, they're probably also a waste of your time. Every once in a while, one's decent, but I just overall, unless you know what you're doing, I wouldn't waste my time with them. There can be good thematic ETFs, but good depends on what you want out of it. I have a thematic ETF that I like a lot because it fits with sustainability and, in specific, not conservationist ideals, but preservationist ideals for nature. I was born in the middle of the woods in Alaska, so I have a very strong attachment to nature. I'm fine with the fact that that particular ETF doesn't earn high benchmarks, but it earns better than most sustainability based ETFs. So I'm fine with that. Again, for me, an ETF or an index fund are meant to be there to stabilize and keep your investments at a more level range. They're not meant to be the racehorse charging ahead. They're meant to be a draft horse pulling a plow. And so for me, if it's getting 10% or even 9%, whatever, it's fine. I'm good with that. I don't need it to be doing a lot and making big spectacular moves. If you care about a specific ideal or virtue, then a thematic ETF can be good. But if you're picking a thematic ETF because you think there's a big trend going on, by the time it gets turned into an ETF, you might be too late for that trend. And I wouldn't recommend picking ETFs based on fads. If you're going to pick an ETF based on something you genuinely believe in, then you can feel comfortable getting back whatever returns you get for that, because part of investing into it is investing into those ideals. If you're extremely passionate about music, or you're extremely passionate about, technology, or you're extremely passionate about video games, whatever it is, you can find ETFs that are based on that passion and invest into the thing that you care about. And is it going to have the highest return ever? Probably not. But is it going to have some sort of return that's better than inflation? Probably. So a thematic ETF can be fine as long as you go in to it understanding that you need to care about that subject matter and not be chasing trends. I've met some people who are a little hesitant about, ETFs in general because they picked a thematic ETF and they did it based on a trend, and then it ended up being that its growth was really low. I'm talking like barely matching inflation after the first year. And I don't really understand the point of following trends and fads. If you're following after a fad, the fad's going to go away and you're going to be left in the background. If you happen to get lucky and get to a party before the party started, congratulations. But most people are going to get to the party after it's already begun, and the party will start winding down, and they'll have missed out on a bunch of the party. So picking an ETF in that way is not really going to get you very far. The other thing I will say with just picking out ETFs in general is ones that have a little bit of a history are probably better. If an ETF only came out in the last year or two, it is probably trying to reinvent the wheel of the ETF, and probably with a higher fee. So if there are some good old classics and they seem to be fine, they seem to be doing their same old thing, trucking along, again, that draft horse pulling that plow, they're not, as risky as the ones that have been coming out within the last year or two. And they're also going to be far less expensive, most likely, and far less weirdly managed by these strategies that, again, are just not in general winning strategies in the first place. So that's what I have to say about ETFs. I haven't actually changed my recommendation. My recommendation is still diversify your portfolio and use index funds and ETFs to help keep some balance in your investing. That advice has not changed, but now it comes with a little more careful steps, a little bit more paying attention to which ones you're choosing. And that is a pity, because it used to be something that I could recommend to people who had no experience with investing in any way, shape, or form, and they could, for the most part, not really go too far astray. And now you can definitely end up with some really just junk ETFs. And it's a pity, but it's kind of like, Netflix. Netflix was meant to be a nice, cheap alternative to piracy so that it wasn't necessary anymore. You could stream some cool shows and movies, and then everybody started jumping on that. Prices go up. You have to get multiple subscriptions to multiple platforms. And before you know it, everything's so expensive because there's a multitude of options now. And there's something to be said for a multitude of options if they're quality options. But if it's just a bunch of junk, then having more isn't necessarily better. So it is a pity, but yeah, that's where ETFs are at, in my opinion.